Well, good morning. This is Business Morning on Channels Television. Thank you for joining us. I'm Chimeze Obi Iwagu. Well, the Organization for Economic Cooperation and Development has warned that the coronavirus outbreak is plunging the world economy into its worst downturn since the global financial crisis and has urged governments and central banks to fight back to avoid an even steeper slump. The OECD says in an update of its outlook that the global economy is set to grow only 2.4% this year, the lowest since 2009, and down from a forecast of 2.9% in November. Now, the Paris-based Policy Forum projects the global economy could recover to 3.3% growth in 2021, assuming the epidemic peaked in China in the first quarter of this year and other outbreaks proved mild and contained. However, OECD says if the virus spreads throughout Asia, Europe and North America, global growth could drop as low as 1.5% this year. Meanwhile, all eyes will be on the global markets again today to see how investors react to efforts by central banks to offset the impact of the coronavirus impact. Australia's central bank has actually cut its interest rates as a stimulus against the coronavirus effect. Now, the G7 finance ministers are also set to take part in conference call to discuss what can be done. And back here in our markets, despite global markets rebound on Monday, the Nigerian equities market remained depressed, with the all-share index down 1.53%. Well, let's get a broader view of what transpired in the market yesterday with Temple Ashaju on board. Good morning, Temple. All right, while we wait for Temple to give us those updates there, let's turn our focus to the commodities market space. And I have here with me Bolanle Agbaje, one of the research analysts with Financial Derivatives Company. Good morning.
Good morning.
Well, I can see COVID-19, of course, that seemed to be taking its toll in all aspects of the market. Yes. All right, let's look at your burning economic issues there. We have the PMI from FBN Quest, which is a forward-looking data, and that shows a decline in the manufacturing sector. Do you think this is all about the coronavirus?
No, not necessarily, because before we felt the impact, although the direct impact of the coronavirus within Nigeria only towards the end of February. This FBN PMI is actually an accumulation of what went on in February. And for the most part, we had not really felt the heat of the coronavirus. But what's normally highlighted is the fact that obviously the FBN PMI has declined, even though it's still an expansion. It's at 51. And
all right, Bolale, let's just take a quick time out here. We'll be back with that discussion. Come back. Well, we're talking about the developments out there on the commodities market space, looking at some of the burning economic issues, and we're talking about the latest PMI numbers there. Yes, you were talking about coronavirus, yes, and of course the PMI.
Yes, so the PMI is it's actually the measure of the health of the manufacturing sector. And for the February PMI, it's actually what went down within the month of February. And the impact of the coronavirus wasn't really felt until towards the end, or more or less 2 days before the end of February. So we can't really direct or attribute that yet to the impact of the coronavirus. In the month of February, we saw that consumers' purchasing power was low. Inflation had picked up to about 12.1, so that affected the demand side. Also, FBN reported that all sub-indices, or all the 5 sub-indices of the manufacturing index actually declined. So you have the output, the suppliers, the delivery time, and all other aspects of the indices also declined. So that shows that, there was less activity or economic pickup. But FBN also reported the fact that, it's the same trend we usually see within January and February, where most individuals have exhausted, a good part of their income towards the end of the year before. And right now they're picking up, they have increased expenses, and notwithstanding the inflation rate as well, we're seeing that there's pickup in or increase in the price of commodities around the economy at the moment.
All right, now, how much of impact would you say the border closure had on the PMI
Yes,
data?
definitely. The border closure had a significant impact on previous PMIs, but I think right now we're seeing the impact more or less neutralize. Most of the manufacturers are picking up. You know, they actually increased supply within the month of January and February. But right now, you know, the impact, what the manufacturers claim to be facing at the moment is the lack of raw materials. They don't have enough raw materials to, you know, carry out their production. And obviously that has to do with our local production of certain commodities within the economy. And also, most importantly, power supply as well. So power supply is still a main issue. And obviously the government is still working on improving power supply. But the month of February, we saw ups and downs with power shortages.
Now that we have this is it COVID-19,
Yes,
we'll call it coronavirus.
Yes.
Now, are we likely to see that impact the March PMI?
Well, I wouldn't say no. I think definitely we'll see. It depends on how the government, you know, copes with the spread of this virus within the country. But I think they're doing a very good job, considering that it has remained only one case in Nigeria, and they've contained the issue. So if they carry on this way, I don't see us having any impact. But definitely, we're a global economy still, and whatever happens within the global sphere will definitely affect us. And we're seeing that impact on our stock market as well. Investors are still wary of where to put their money. And also, most importantly, some investors have cited the fact that they're unsure about, you know, the policies of the central bank. And when they don't have like a direct focus on what the central bank is about to do, you know, shocks on policies and all that.
Yeah, but we've seen the global central banks, we've seen the Fed, we've seen Australian central bank doing something.
Yes.
I mean, most of these central banks are coming up with some kind of stimulus package.
Yes.
We're expecting the central bank, of course, to announce its monetary policy decision. Do you see them actually doing anything, particularly now that we have this case confirmed here in Nigeria?
So I think I don't expect them to, you know, move interest rates so soon, considering the fact that we've been able to hold things the way they are within our economy. But it's something they would monitor over the next few months. I don't think our central bank is not, they don't carry out the trend of just, you know, imposing shocks within the economy just because the global economy is doing so. They actually take their time to monitor what the economy is doing. And I think we're doing very okay at the moment when it comes to, you know, containing this virus. So I don't expect them to, you know, decrease interest rates so soon.
Now, this decline in PMI data, what will be the implications for commodities market space?
Well, we do, obviously the decline would we've suggested from the demand side we're seeing low demand, and from the supply side we're also seeing low supplies, and the mix of that together would mean that, you know, commodity prices should decline over time. But so far so good. Our commodity prices have remained stable, with the exception of, you know, more or less flour and bread. We expect that the prices is likely to pick up in the next few weeks, and that's just because of the new import levy on the price of wheat. They're about to increase that by about 15%. And when that happens, we should see an increase of the price of flour and bread, well, particularly flour, to by about 1,650 naira. So currently, price of flour is about 11,000 naira per bag. So obviously, we should see that increase if, you know, we see the impact of this import levy on the price. But definitely, prices of commodities have remained stable.
Okay, now another burning issue there is the oil price.
Yes.
Presently, we've seen the prices come below Nigeria's benchmark target,
yes,
for 2020 budget. This call for a concern, right?
Yes, well, it does. It's something I think the government already expected, because one, I think the most important aspect of this coronavirus is the fact that there's no cure. And when there's no cure, you can't really put a timeline on when, you know, this whole virus scare would end. So I'm sure the government obviously realized that at some point oil prices will fall below the benchmark. But what's more important is the fact that you're seeing oil prices reduced to as low as $50 per barrel. And it calls to question what's happening with our subsidies. when you see oil prices decline like this, it calls the question what happens to PMS, the price of the pump price of fuel within the country.
Well, you are saying that that is good for us and that will help reduce the petrol subsidy.
Yes, definitely, because if we're seeing that landing cost has actually reduced by about 23%, meaning that the cost of importing refined products, refined crude, has gone from about 163 naira per litre to 123, which is great. And the sole importer of refined crude is only NNPC at the moment. So it calls the question, you know, in the budget, the Minister of Finance stated that the amount for under recovery when it comes to NNPC, which is another indirect, you know, word for the fuel subsidy, is about 450 billion naira. So what then happens to that 450 billion naira that they're, you know, attributing to this subsidy? So it's great for us because we do have money that could go somewhere else. The opportunity cost of, you know, spending that on subsidy moves on to something else. And obviously we're desperately in need of more money within the economy.
All right, OPEC is meeting on Thursday.
Yes.
And obviously they are likely going to cut output.
Yes.
What will be the implication of this, particularly to Nigeria?
If they do cut output, it means that obviously our revenues from oil is likely to decline. Currently, our output cut is about 1.7, and that is expected to decline slightly further than that. And if that happens, it will definitely impact our reserves, which are already at about, you know, $35 billion. And it calls to it's more or less impacts our cushion within the economy. But then we come times without number to talk about other ways the government can, you know, increase revenue and less dependent on, you know, oil.
Okay. Now, what will this mean now, looking at, you talked about the reserves, of course, declining, and we've seen over time the central bank has been trying to support the Naira. How far do you think they would go with this?
Well, I think definitely the central bank would look, although the Naira has been, it has been stable it has only depreciated slightly. So I'm sure they will pull back on, you know, their interventions more or less. But I think the government would also look at other ways to increase funding within the economy by borrowing. But I don't know how borrowing will go so far regarding this coronavirus scare that's happening around the global economy.
So what should the fiscal and the monetary authorities be doing at this time?
First of all, they should be working together. It's a crucial time for the fiscal and monetary policies to be aligned. They should have a direct, you know, focus and, you know, realize how to protect the economy and build the economy strong based on what is happening in other parts of the world. And obviously definitely reduce or look for ways to, because the way the central banks all around the world are trying to cushion, although they can't really do so much because interest rates around the world are already, you know, at very low levels, and there's only so much they can do. But just that signal has already given a boost to several commodity indexes like the Bloomberg Commodity Index, Dow Jones, FTSE 100, some of these stock markets. So I think that's the only way the government can actually, you know, brace themselves for now and keep investors within the economy. Because at this time, we can't afford to lose investors within our economy at the moment.
All right. Thank you, Bolanle Abaje.
So
we'll leave it at that. Bolanle Abaje is one of the research analysts with Financial Derivatives Company. All right, we get back to the Nigerian Stock Exchange for update on market activities. Yesterday, while global markets are rebounding, Nigerian markets seem to be pressured. Let's get more details from Temple. Hello, Temple. Good morning.
Good morning, Chimeze. Thanks, Greatest, for this opportunity. So let's get through the market numbers now, beginning with equities, as always. We were down yesterday by some 1.53% again. That dragged us into a further decline in the year-to-date performance of the market, which is now at 3.82%. And if you look at the market capitalization, we shed some 208.32 billion naira yesterday alone, which tells you that investors are no longer bullish about those markets. As things are, we had 28 laggards yesterday, led in the main by PZ, which was down by some 10% because, again, investors have been giving real cold shoulders to the consumer goods segment of the market. We also had 9 gainers in the market, thanks to Law Union and Rock. This is a particular insurance company which has been weathering the storm lately. It was up yesterday again by 10%. As a matter of fact, it was on bid and, of course, closed at 99 kobo, having opened at some 80-something kobo yesterday. The Cantor has appreciated by over 35% now in the last 6 sessions alone. And of course, the reason is not far-fetched. We all know that going by the announcement made to the stock exchange on Friday, Verod Capital Management is actually injecting some funds into this particular company, buying over 100% stake of Law Union and Rock. So that's ₦1.23 kobo. That's the offer price, and of course that represents some 36.67% premium above Friday's close, where we saw the counter closing at 90 kobo. So you see investors who are really interested in buying in the settlement of each share at ₦1.23 kobo, closing in their positions there. So year to date, we've seen this particular company gaining some 98%, and of course, it is doing some 200% above its 52-week price, which was at 33 kobo some weeks back. That's still the best performing stock so far in the market. For the top trades, in spite of the fact that Guarantee Trust Bank is offering or recommending 2.50 kobo dividends to shareholders, that's not enough to allay the fears of coronavirus in Lagos or in Nigeria, as with its effects that we now see in the market. I was down yesterday by 4.62%, and of course was the most actively traded stock in the market. 94 million units of the shares worth some 2.14 billion naira actually was traded in the markets yesterday. Activity level, we saw some 325 million units of shares traded in total for a total value of 6.02 billion naira, and that's really higher compared to the 30-day average that we do around 3 billion naira daily in those markets. Deals, look at it, has surged again. It was over 5,000 deals that we had in the markets yesterday. Let's drill down into the sectoral performance of the market. Consumer goods segment again was the worst hit, was down by 519 basis points yesterday, fell by this particular margin due to losses on all of the major companies that you have in that sector. As I said earlier, PZ was the major loser of the day, dropped some 5.19% by sector. PZ was down by 10%, Unilever was down by 10%. Nestle, in spite of offering some 45 naira in dividends to shareholders, to investors, it was down by 10% as well yesterday. The sector has now lost some 26.75% of its total value year to date and remains the worst performing sector in the market. The banking segment of the market was no different yesterday. It was down by 366 basis points as a result of the declines that we saw in Access Bank, Fidelity Bank, GT Bank, UBA, and even Zenith Bank, which was down by 2.43% yesterday. Industrial segment of the market was also down by 122 basis points, and we saw that the sell-offs in WAPCO, which is Lafarge now, was created a major impact in this regard. Qtix was also down by 5.3%. But if you look at the insurance counter, that sector was actually positive by some 30 basis points, thanks to Law Union and Rock, and of course ICO Insurance. I think some folks are trying to buy ICO now because of probably some dividends that will be announced any moment from now when the FY 2019 numbers are released. But if you look at the oil and gas counter, it was negative by 35 basis points. There was not so much of activities in that segment except for Eternal PLC. Eternal Oil appreciated by 5.53%. The losses in that segment seem to have bottomed out, and it kind of created an opportunity for some investors to be able to buy. Chimeze.
All right, thank you, Temple. And when Business Morning returns, how would you trade COVID-19? Find out in a moment after the break.